Oh, yeah, I forgot to wish you guys a happy Indigenous Day. We always called it Columbus Day, but I thought I'd come back at the closing bell to let you guys know what happened with these and the whys behind it. Well, nothing really happened because the bond market was closed today, but we did have a huge reaction in the stock market. I want to talk about that briefly in this episode, and what we're expecting tomorrow at the opening bell might not be looking too good for the bond market. But without further ado, folks, let's get to today's news. So the bond market was closed, so that's why mortgage rates didn't really move at all. But if you go over to the stock market, well, we got back basically everything we lost on Friday. What happened was President Trump came in and he tweeted that he's going to add 100% tariffs to China. Now, we don't have a deal yet with China on tariffs. We thought it was kind of getting to a nice concluding end within that reaction. But over the weekend, he retweeted and said, no, it's all good with China. So the markets just got back to normal, hitting record highs across the board. So tomorrow, here's my expectations. The VIX is down, meaning anxiety level on Wall Street's down, and the markets are up across the board. So probably what's going to happen? People are going to move into higher risk categories. Let's see what crypto's looking like. Yeah, that's proven my point right through here. So they're going to move out of safe havens. Then that's what happened on Friday, and that's what really pushed down mortgage rates. They're going to start moving that direction or the other direction come tomorrow. People are going to start pulling their money out of bonds and putting their money back into the stock market because it looks like this AI end is nowhere in sight. So let's get over to what happened in the bond market. Well, like I said, nothing because the markets were closed. If you get over the economic calendar for the week, we were hoping to get consumer inflation, producer inflation, the unemployment rate, and a whole bunch of other stuff. We're not going to get anything. So we're going to have to focus in on the data we get each day, even tweets on what the markets do. But on the FedWatch tool, Fed's meeting in 15 days. What are they going to do? Well, there's a 99% chance they're not going to do anything. It looks like there's a 95% chance they're going to cut at the next meeting. But you know, and I know, just because they cut doesn't mean mortgage rates are going to come down. So we're going to focus in on for that, especially this week. We have a slew of earnings coming out, especially bank earnings. So we're going to monitor those all week long. Really nothing today. Tuesday, Wednesday, Thursday is going to be a slew of them. We're going to focus in on how they are coming in with their earnings. The earnings keep coming in better and better and better. It's not going to be good news for mortgage rates and yields because people are going to add to their equity positions, meaning bonds are going to start taking it on the chin a little bit. So my expectations over the short run, we're going to see mortgage rates ticking up. We might see a big move tomorrow morning. Here's why. On Friday, we had this. This is the 30-year bond that really affects mortgage rates. So if you go over to there, it says MBS. That is a mortgage bond that basically trades on Wall Street. And this is what we focus in on to figure out what's going to go on with mortgage rates. But today the markets were closed. So let's look at what happened Thursday and Friday. I'm going to give you some bad news probably here. Thursday, the markets were kind of just steady for the week. We didn't have much actions, and I've been saying that for the last 2 weeks. It was kind of nice. And I said, it seems like the calm before the storm. What happened all of a sudden? Well, we had President Trump tweet, and that sent the markets going crazy. Okay, so then after that, it settled down over the weekend. So what I'm expecting tomorrow to happen, this gap might be filled. Okay, so what happens here is this gap gets filled. That means the bond market's going to open up somewhere down here. What do we know what happens with bonds and mortgage rates if the bond price goes down? Well, here's what happened on Friday. You saw the MBSs were up 42 ticks. What did that do to mortgage rates? It dropped them down 6 basis points. So when you're following the mortgage bond right through here, if the bond price goes up, that's good news because mortgage rates are going to come down. Well, tomorrow, if it opens up down here, that means the bond price is going to go down and mortgage rates are most likely going to open on the high side tomorrow. So if you're out there and you're looking to buy a new home, please try to get in here and schedule a consultation with us so we can help you analyze, does this make sense? Can you afford it? If you're also a homeowner and you're looking to try to track rates to see, do you have a good opportunity to take advantage of these low rates? Well, let's get over to my website so I can explain to you guys what I do real brief. Before you go. So my name is Dan Frio. I actually do this video every day to help you guys understand what's going on with these and the whys behind it. Folks, I've been doing this for over 30 years. I'd love to help you if you're navigating buying or refinancing. We have tools for both of you. If you're looking to buy right now, check out this right through here. It's a 1% down program. We're going to give you 2 of the 3% down you need if you're a first-time homebuyer. Check it out. If you're a homeowner right now trying to get the opportunity to refinance and you're like, Dan, the rates are all over the map, help me lock in a good rate, well, just go to the RateWatch tool right through here. What we're going to do is what we're asking you to do, plug in your information and then let me know what rate you're looking for to refinance. When it hits there, I'll reach out to you and give you what the new payment would be, what your savings would be, what the cost would be, obviously, and what your break-even point would be. And if it makes sense, we'll get the paperwork started and you're locked in. If it doesn't, we'll just lower your rate. So come back tomorrow because we'll have more and more news on where these are going to go. But unfortunately, I'm thinking these are going to go up a little bit tomorrow based on the news that we got today. We get the news we got over the weekend. But to find out for sure, join me tomorrow morning and make sure you subscribe down there. So every time I post a video, you get an alert. And I'm trying to hit 40,000 subscribers, folks. So if you'd help me out, click down there. You'll get me there quicker than we were anticipating. So thanks again for watching. Look forward to seeing you here tomorrow. Bye-bye.